Good evening, I'm Giuseppe Basile. I'm the Essential Trader. You can find at the website fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening. Today is Sunday, December 22nd, and it's past midnight here in Toronto, and I'm going to record this video weekly review for my newsletter, and this is the first video. I only distribute these videos to my subscribers. So if you want to receive the videos, just go to my website fibstalker.com and subscribe the free newsletter. In this video, I'm going to review for you the euro versus dollar, the euro dollar forex pair, the SP500 E-mini, the dollar index futures, and the gold E-mini future. So let's start from the euro dollar. What you see on the screen is the euro versus the dollar weekly chart, and this is the forex price. Market are open again. This is the weekly chart. So those who follow me know that I've been timing this support area here in 128.76 since the beginning of February, and we had participation 3 times at these levels here. Eventually price broke the opposite measure move here short and continued higher. We saw a number of retracement, and we saw first of all market getting support initially 131, continuing higher, almost reaching that second target, but eventually the market went all the way halfway back, did not continue higher, and we have participation again at this 133 area here. Now last week, as I'm going to, 2 weeks ago, and as I'm going to show you on the daily chart, we have the failure of this move higher, so it means that we are going to correct again. I just want to draw your attention to the fact that these 2 measured moves here and areas where we anticipate the participation of program trading have a target bought at this 141 area, so it's not unreasonable to anticipate price moving higher. Now last week we had a news event, a significant news event. Sorry, I'll show you the daily chart. I want to show you the daily chart for the euro dollar, and we had this move lower that broke our Wolfram daily setup. And the daily setup I gave you on December the 11th was this draw with program trading participating at this 137.20 area, which eventually gave us a free trade, a free risk trade. But the day of the Fed came with their initial tapering of 10 billion every month, which leaves still 30 billion, or I believe 70 billion every month. This move, I was saying, broke this 136.93 level, and which means that now there is the possibility for this move to continue lower. In this weekend, I'm going to provide you with 2 additional videos explaining how I use the fib stalking technique, timing technique, and the euro will offer a very good example. Just want to show you on the 240 minutes for our chart that the first level of resistance and reaction lower we had at this 137.11, which I traced from previous highs, not considering the activity of high frequency trading the day of the FOMC announcement, which produced this spike higher and this high here. So as you can see, participation was actually there, but I'm going to explain this in more detail in the dedicated video to the euro dollar. There will be 2 of them, one dedicated to euro dollar and the other one dedicated to the Australian dollar versus US dollar. Moving to the SP500, then I want to start again from remove this. That's the from a previous newsletter, and I want to remind that in the last few months I've been timing this measure move here, and we got to the first target 1718 and second target 1805 that you will probably know as 1813 if you follow me, because what you see here on the screen is the continuous contract of for this futures, and this second target 1805 was actually 1813 on the previous contract expiring in December 2013. This is the March 2014 aligned continuous chart aligned to that contract March 14, and as you know, I was anticipating a full retrace into this 1738, which never happened, and we had on the other side a continuation higher that Wednesday, starting that Wednesday of the FOMC. So at the moment it seems that program trading is using a different trace. Yes, is using a different anchor, which could be this anchor, and as we can see from the daily, switching to the daily here, this anchor started working only after the FOMC, and I'm showing you why. So we were this is the trace I was expecting. I'm still expecting. Of course, it will be higher because now it will need to consider new highs, and we had actually program trading starting using this anchor just the day of the FOMC. We saw price dipped into this level 1763, beginning 1763, and then the day of the FOMC we had somehow this area being respected, and this area has two more targets on the upside, and these targets are going to be 1826, the first one. We are very close to that, and we might get there Monday or Tuesday before the Christmas break, or and actually we could even continue higher into 1859. The fact that this market did not retrace may be suggesting that we entered a more emotional phase maybe, and or this is just the result of the Christmas rally that helps funds to provide a better results for the third, fourth quarter, and also the end of the year. So we have always to keep in mind that my idea is that this move higher is being driven on the short time frames. There is also another type of setup that we should keep in mind, which is an inner setup, and this is with a support at 1630, and would have a first target which we already saw 1764, and the second target is in this 1833. So this is what we have to keep in mind for this market. For the dollar index, there is not a lot to say. In the weekly chart, we have showed the existence now since now months, if not years, of this 84, 85 level, and that's the line in the sand for Bernanke. And I also want you to notice that there was a failure of this 79.81. Now the dollar might well continue higher based on the expectations for the tapering and additional tapering to come to be maybe available on the way. We don't know that. But still, from a technical point of view, the 79.80 was violated, which is an important indication. On the daily, there is not a lot to say. The dollar index has a very small volume, so traces on these futures contract are not really relevant. So if you want to trade the dollar index, just look at the euro dollar and take the other side of the trade. And next is gold. Again, I want to start from the from the weekly chart, which is what you see on the screen. Again, this is the continuous contract, and this is aligned to February 2014 expiration. And we have a better draw here to explain this move lower, and this is from the low before the after the last high here. And as you can see, participation was at the peak at this 1430 area, and this this setup is an extension and has two targets, one at 1062 and the other one would be 870. And but this target would put a lot of gold mining companies out of business. So the gold business, I mean gold extraction, mining, it's in a situation in which a lot of companies did not still started hedging their business. It means that there could be a lot of companies that, as the price goes lower, could start selling futures, and you know what that means. I mean, more offer will come into this market, and there is really the possibility to get into 1062 and even 870. So I'll be very careful with this market. Moving to the daily, you know that on the daily I've been timing this measure move short here. We had participation on the short side, and in this 1342, and we hit 1207 here, and as you can see there was profit taking at these levels, and then there was a continuation lower with this previous low being overcome, and we still have a higher low here. But my idea is that there is a very good possibility that we will eventually see this 1138, and we can actually a first area we should look at and eventually react and see and reevaluate this market, if that happens, is if we see this market moving above 1226. But for now, I think more probably is a continuation lower into 1838, which is also in line with what we see on the weekly time frame. I hope this video is useful. I wish you a very good trading week. This week is going to be the Christmas holiday week as well, and I want to wish all my followers and friends and fellow traders a very happy Christmas. I hope to see you soon and relaxed next week or the beginning of the new year. Just take some time to relax and spend time with families and out of the markets, which are always very demanding. Thank you very much for your attention, and all the best. Bye bye now.